We got a couple of questions around the need for life insurance to supplement what they get with their company policy. So we got a general question, then we got another one that was age specific of someone asking that their son had just gotten his first job. He was 21 and wanted to know if it was necessary to think about supplemental life insurance for him also outside of what he's receiving through his company.
Okay, let's again, this is a two-part question, and I've been very bad about remembering the second part of the question because
You're doing
I
great.
get wrapped up in the first part of the
So
question.
one was general, but one
the
was
first
then
part of the question is
specific
actually
for young.
more people are going to be wondering about the first one. There aren't too many 21-year-olds really thinking too much about life insurance, but I'll get to that in a moment. At work, typically people with their health insurance, if they have health insurance at work, it is made available for free usually at most employers for a token amount of life insurance, somewhere between 10 to 25,000. Sometimes it's one-time salary, but 10 to 25,000 is probably the most common thing that's included in your group health insurance plan. It's a little bit of life insurance just to basically cover burial expenses. Oftentimes people are allowed in an enrollment period each year to buy up or buy additional coverage without a medical exam at work. And you might say, well, is that a good deal? Should I think about that? And I would say, I have never seen one that's a good deal. It's usually a bad deal. And the reason it's a bad deal is because there is no medical involved. The people that are the sickest tend to be the ones that grab the most of it. And the carrier sort of knows this, which is called anti-selection, which means they kind of know the bad risks are the ones that are going to pile on, and they price it that way. And so if you're healthy, you're better off going out into the private marketplace and proving that you're in good health. The other thing is those group plans tend to have rates that are basically in 5-year age bands, which means that at age 30 it's one price, at age 35 the price goes up, 40 it goes up again, 45 it goes up again, and it can go up any time, even in between those bands, if the carrier decides to raise the rate, which is not guaranteed, or the company decides to change group carriers and put in a different carrier, the price can be different. So they also are not portable. So there's all kinds of reasons why group term life insurance is not usually a good deal. I mean, if you're buying it at age 25, it's about the same price as the open market, but your price is only guaranteed for that year. And by the time you're 45, you'll be paying more than you would be had you locked in a price on the open market, and it would be portable. So overall, not a great deal. If you're reasonably healthy, you owe it to yourself to actually go into the open market, see what it would cost, see how long the rate would be guaranteed, and I would tell you that 99 times out of 100, when you see that, you would select a privately held policy versus a group policy. It's almost counterintuitive. A lot of people think, well, my company's got 2,000 employees. I'm sure they got a group discount. They're getting a big volume discount. Like if you bought anything else in volume, you get a better deal. But because of the way life insurance is individually risk assessed, that actually hurts the carrier because they know that the worst risks are going to step forward. Now, getting back to our 21-year-old, there aren't many 21-year-olds on the planet that have a lot of people depending on them financially. So I don't know how many 21-year-olds out there are listening to this that are even thinking about adding or needing life insurance, but it's certainly not an urgent thing. I would only say that if there's a history in your family of certain medical conditions, like maybe diabetes, if your parents have diabetes or heart disease or cancer, and you want to lock in the coverage while you're healthy, then it might make some sense to get some coverage while you're young and healthy. That's one of the reasons why we sometimes look at life insurance on children. If the parents have a history of medical issues and they've wanted to buy life insurance and they've had a tough time doing so, it's either been expensive or unavailable for them, those are the people that are much more cognizant of the possible risks for their children and their children's ability to protect their families in the future. And it's why a lot of people will lock down life insurance for children while the children are still healthy.
All right, thank you.